property moves fast. We help you move faster. Welcome to the VSBN Podcast. I'm Cynthia Peretz from Metrolinx Property Advisors, and today we have two special guests, Evans from Attain Loans and Lynda Sanders from Dixon Sanders Lawyers. And we are going to talk about property. So Metrolinx are vendor and buyer's advocates. We help clients buy and sell their properties. And we can't do this without the help of our partners, two of them being finance and legal, because they're really two important parts of the process. So just a little bit about our background. So we help clients with the strategy, inspecting properties, negotiating, and then going to auction. But we can't do this process until they've got their finance sorted out. So Christelle, over to you. And what would you say the biggest mistakes you see buyers make when it comes to finance, and how can you help them avoid this?
I would say the biggest mistakes would be going to their bank and not looking for a broker. And I would say a good broker, for the reasons that there's just so many more options. So the biggest problem is that banks are very limited in what they can do. They all have different policies and procedures and their own appetite for risk. So when you're looking to buy and you go, well, I'm with CBA or I'm with ANZ or whatever bank it's with, the first thing that generally people will do will go to their own lender. And what they don't know is that that lender may have restrictions around their personal circumstances. So we see lots of self-employed clients that will go to a big four bank that just don't really have a strong self-employed policy, and then they think they can't buy, so they'll stop and they'll wait. So I think getting the right support and the right guidance around finance is really important, and where that's going to come from is a broker, because they're going to have a much wider range of products and they're going to have a much larger view of your circumstances. So I would say that would be the biggest mistake we see, and then the waiting is the other second biggest issue we see. So they get that advice. It might be from the bank, it might be from friends or family, or they might talk to their parents about what deposit they needed, and it was very different when their parents bought, and then they lose that opportunity to buy in the market because they think they're not ready. So I would always say to clients, the first thing that they should do is have a consultation with a broker and figure out your borrowing capacity, figure out what deposit you actually need, what grants and schemes you can get access to if you're a first home buyer. And even just the strategy around what type of property, because different types of property have less costs associated with them entering into the market. So yeah, don't listen to that noise. There's a lot of noise in the finance industry, and you can Google it and you're going to get 55,000 different results. Sit down and talk about your own circumstances and actually figure that out with a broker that's got a pretty good range of products. If they've got less than 20 lenders on their panel, avoid them, because there's 100 lenders in Australia, and that's such a small segment of the market. Do your research.
So when buyers come to us as buyers advocates, they need to be pre-approved. Yep. So can you explain more about the pre-approval process and what it takes, and how important is it from the finance side?
With me, it's interesting, because one of the parts I love about especially first home buyers, but whether it's first home buyers or second home buyers and they're trying to figure out what they can buy, is that conversation around, okay, what are we trying to achieve here? Like, where do you want to live? What is it going to cost? Have you been looking? What kind of properties are you interested in? Because it gives me a really good idea about what circumstances we need to plan around and whether it's actually appropriate to do a pre-approval at that time. So that first conversation, if we get to the end of the conversation, the client's feeling really well educated, they're really informed now, and they feel like, wow, we can actually do this. Well, then, yeah, we would go down the road of applying for a pre-approval. We would encourage them to use a buyer's agent, because opportunity lost. We see it all the time. People go, yeah, I'm going to go look for myself, and then life comes into it. They don't have time to inspect. They don't know what they're looking for, and they get a little bit disinterested, or it blows out, and the pre-approval means nothing. So pre-approvals are 90 days generally, and then they expire. So we would only encourage them to do a pre-approval if we thought they were actively going to be looking, and they were ready to start looking, because we don't want to make those inquiries over and over again on their credit report and affect their credit rating. If they're not ready, what we will do is an initial assessment, and actually give them an initial assessment from us saying, we've assessed your circumstances. We've been in the industry since, over 20 years. We've looked at your pay slips, your bank statements, your expenses. We've had those discussions, and this is what we would recommend your limit would be in terms of buying, and that will be based on a couple of different lenders. It won't be based on the very maximum in that, because we want to be kind of like that top mid-range in terms of the lender's borrowing capacity. Everyone's different. And that gives them a good range of products when they do go to buy. So we'll give them kind of a pretty good idea of what they can spend. And then so when you find a property, send it to us and we'll run the numbers with some more specific data and the banks at the time, because things change all the time. But we'll give them a good range. And then when they're ready to actually apply, then we'll go down that road and do the pre-approval. But a lot of the times we'll start with that first step and it progresses very quickly to the second step, because once people are informed and they start looking or they start taking the actions to actually buy, then we need to go down that second step of doing the pre-approval, because it makes everything a little bit quicker on the purchasing side once we've signed a contract. Yeah,
I find that people have a wish list, or if they're selling a property, they think that it's worth more than what they think it is worth on the market. So it really is important that we get a finance person has told them this is what you can spend. It includes stamp duties or whatever other fees, because people forget it's not just the price that you've paid.
Yeah.
There's always an additional cost that goes with a property.
And people should be clarifying that. But I get that question all the time. And I don't know if there's brokers out there that are doing it without the cost included. But when we're doing that borrowing calculation and we're working out whether their deposit's enough and their income's enough, we're including all the fees. We're including the conveyancer. We're including the buyer's advocate. We're including the bank costs. We're including government costs, because we don't want to get to settlement either and not be able to settle. We need enough funds for everything. It even includes a bit of surplus and adjustments and all of that stuff, because that's our job to be able to say to them, you have enough deposit, including all of those costs. So they should definitely be clarifying that with whoever they're dealing with, because we've definitely seen some bankers and brokers who have said, hey, you need X, Y, Z to settle. Oh, actually you need another 20,000 because we didn't account for the fact that the first home buyer's grant won't get applied to land and you won't get it until the basis, applied. So, there's circumstances where I've had to step in and fix things for people because their broker or their banker hasn't calculated things correctly. So definitely clarify those figures, include all costs. But your broker, you should be able to do that calculation very easily. It's something we do every single day.
It's interesting that you say that, because somebody asked me the other day, how can you tell between a good broker and a bad broker? Well, you've just kind of answered that. Do more than just what's on the piece of paper. Make sure that people have a safety net, which is 100%. What you've been talking about. So, okay. So next in the buying process, we know what the clients can spend. We go out and we inspect properties. We shortlist. When we're ready and we tick all the boxes, the due diligence that needs to be done, well, for any buyer, but more so from a buyer's advocate point, is to get a building inspector through the property. But before we even do that, get the contract of sale read, and something that they call a Section 32. So today we have Lynda from Dixon Sanders Lawyers. And what would you say a buyer should be looking for when reviewing a contract of a sale and a Section 32? Not that most people would understand it themselves, but...
So the first thing is they should not be reviewing the contracts themselves. Yes. They should be getting professional advice from a property lawyer, such as myself and my team. We review all the contracts. We make sure people understand what they're getting into. We always highlight any kind of financial issues that might arise or are pending. We talk about, in terms of what the client's needs are, what are they planning? If they're buying land because they want to develop it, or are there any design guidelines that need to be raised and issues about that? If they're buying off the plan, they need to understand the registration dates and what does that all mean, and what's the outcome if the registration date passes and the plan of subdivision hasn't been registered. So there's a lot of legal ramifications that need to be outlined for people, and they need to understand that. And there could be financial implications as well. And we make sure that they fully understand all of that, as well as things like default. What are the default costs? We can see clauses which say things like, if you are in default, you have to pay the agent's commission. Well, no, why would we pay the agent's commission? That's the vendor's job, not a buyer's job. So those kind of clauses we need to get out. And although nobody wants to default, sometimes you might be a little bit late because your bank's not ready, or, life happens. So it's really important clients understand what their obligations are and what are the possible outcomes and ramifications if they don't meet their obligations.
It's not uncommon that people get roped into the glitz and the glam of this property and they just sign without having a contract read. So to me, that's a red flag. Because people do, they bow with their hearts and not with their heads.
Yep.
And it's a matter of trying to control them to say, one more day. So all it will take is one more day. It's a legal document. I know that I have agents that say, well, you can sign on behalf of your client when you're submitting an offer that's in a contract of sale. It's like, well, no, this is a legal document. If you take it to your seller and they're going to countersign it because they've accepted your offer, I'm not liable for the sale. So are there any red flags in your years of experience that you see?
Just going to make a list. Do you want them?
Okay, so just going back on some of the comments you just made, some agents have certainly told my clients it's a standard contract, you'll be okay, you don't need to get this read. And although it might be the REIV or the LAV standard general conditions, the special conditions are not standard. There is no such thing as standard special conditions, and that's where people get caught out. But it's more than that. So the vendor statement, which is also known as a Section 32, and that's Section 32 under the Sale of Land Act, that's where it comes from. And that particular clause in the Act lists all the things that need to be included about the property for it to be sold and for it to be a valid contract and vendor statement. So they can contain all kinds of things or not contain things that need to be in there. So there could be building permits aren't in there, or the builder's warranty insurance isn't in there, and people need to understand that. Or my other favourite one is there's a pool and there's no pool compliance certificate, or the pool barrier certificate compliance is not in there. It's not been registered with the council. So all of these things are ramifications for a potential buyer if they sign this contract without that information and that information is not available. So they then become liable for the pool compliance stuff, and the council can turn around and say, sorry, no, you don't have the certificate, you need to get rid of that. Or it could be they've built a pergola in the backyard without a permit. So all those kind of things need to be properly researched and assessed. We know what we're looking for and what should be in there, and we can tell clients when things are missing or that further discussions need to be had with the vendor's agent or the vendor's lawyers to make sure that it's a compliant document. So anybody who tries to get clients to sign off quickly always is a bit of a red flag for me, because I think that everybody deserves a right to have some legal advice and make sure they understand what they're getting into. And although, as long as they haven't signed a contract at auction without advice, there's a 3-day cooling off period. And although that's fine, you can get your contract reviewed in that time and turn around and say, no, I'm sorry, I'm out. There is a financial implication for that, where they have to pay 0.2% of the purchase price as a fee for breaking that contract. So like you said, wait that extra day, get it reviewed, make sure you're happy with it, and then sign, and then you know you can go ahead with it. And there's also things like, making your contract subject to finance. And what does that mean? So we're seeing a lot of people putting in clauses about you must have a letter of rejection from your bank or you can't terminate under the finance clause. That's a huge issue for us, and I see always request that that's removed. And the main reason being that you may not have been rejected yet, but you haven't been approved yet. So you need to make sure you've got some leeway to be able to pull out of that contract if you don't have approval. Or your broker might say, we know you're not going to get finance, we're not going to put it through because it's going to ruin your credit rating if you've got a rejection for a finance application on your credit rating. So those kind of clauses are really important, and people need to understand what they actually mean.
Yeah, so I suppose that brings it back to why there are such things as buyers advocates, is because we do have these people that are there to support our buyers as well, and we trust to guide them through to make sure that they don't make these mistakes. So then going on with the process, we find a property, we negotiate, or we go to auction, the deal's done. So let's say it's a 60-day settlement, and then it's going to come time to a pre-settlement inspection where we go through the property and make sure that it was in the same working order, if I can say,
Condition.
as it was condition. And one of the biggest things that I find is that people don't test appliances because they think, I can go and check a property a week before. But if you didn't check everything to make sure everything's working, you've got nothing to hold them on if suddenly the oven isn't working or the aircon or anything else. So just explain, I suppose both of you from a finance side and a legal side, is in order for people to be ready for settlement. So I talk about and I tell people that there's a platform. You don't have to go to the bank and sign anything anymore because everything's done electronically.
Yeah.
So which one of you wants to explain what the word PEXA means and
That's
a me thing.
that's a whole lot
That's
of
her whole
Lynda.
life.
99.9% of property transactions in Victoria are on PEXA. The only ones that aren't are Nico titles and things like that, but that's a conversation for a whole nother day. So your standard property purchases and sales will be on PEXA. So it's the online platform that all conveyancers, lawyers, property lawyers, banks, all of those kind of financial institutions that are involved, so not just banks, but the financial institutions and their representatives are all subscribers on PEXA, and we all transact within what we call a PEXA workspace, and each property transaction will have a different PEXA workspace. And you can be invited into that. Usually what happens is the vendor's representative will start the workspace and then invite all the other parties in. So as a purchaser's representative, we would be invited into the workspace and then we would invite our bank. And that's where we do things like we draft the documents like transfer of land, the discharges of mortgages, registration of mortgage, notices of acquisition, all get done electronically on this platform, and then all the parties can see that and sign off. And that's when we also put in our check directions. So when the vendor says, this is how I want the balance of my money, pay out my loan, pay out my solicitors or whatever it is, all those check directions are all put into the PEXA workspace. And then the incoming bank will put in how much money they've got for settlement, and we make sure that everything balances. And once it all balances, everybody gets to sign off, and then we hopefully settle.
Okay, so
we just get to see
everybody sees on. So when you spoke about a discharge, is that an area, Christelle, that's part of the finance, that if you're working out finance where somebody wants to buy?
Realistically, from a purchase point of view, the only discharge that comes into it is the vendor's discharge of their loan. So
Yes.
as part of the adjustments, and Lynda will talk more about that, I suppose, but yeah, we will see that the vendor will cover the cost for that discharge, but they need to discharge their loan to enable our purchaser to register their mortgage onto that title, right? So all of that goes into the adjustments when Lynda's doing her calculations at settlement. We just need to make sure that we've got enough funds for the fees we need to charge. So there'll be fees that the vendor needs to cover from their sale proceeds, and then there'll be fees that our purchaser needs to cover as part of their purchase contract. So the discharge component, it's something that needs to be done in order for us to register, but the vendor generally covers that as part of the adjustments and their costs for selling.
Okay. The buyer really is covered in all directions for what they need. So on the other side, so Metrolinx also do what we consider vendor advocacy, which is where we support the seller. So that's done where we are real estate agents, but we're not your everyday real estate agent that goes to put a sale board out on the house. We are there to be like a project manager and support the seller so they understand, because the frequently asked questions that we get is, how much is my house worth? How much commission should I be paying the agent? When is the right time to be selling? If it's an investment property, do I have to get rid of my tenants? Can I keep all of this? And we are brought in to assist the seller. We help them choose an agent. You go through the process. One of the biggest things for the seller is that the agent that we choose pays us. So it's a free service, and they're getting a qualified person on their side to help them with the advertising and the open for inspections and just hold their hand on their rights. So from a finance side, do you work with these sellers to then work out, okay, you should be selling for this much money because you want to buy somewhere else? So how do you get yourself involved with the seller finance?
We do a bit of bridging finance here and there because it is a good solution for clients who are wanting to buy another property but don't necessarily want to move out of the existing property. It's not for everyone because it is very restrictive in terms of the amount of equity available needs to be sufficient in order to enable that bridging loan to occur. So it's usually about 70%, 73%. Some of the big banks go to 80%, but they also factor in a whole bunch of, accumulated interest and whatnot. So it's not that attractive. But bridging is attractive from the point of view that it's short term. And the reason that we encourage clients to use a vendor's advocate is because we've all been in the position where the property's been on the market and it's not sold. And so you only have 3, 6, 12 months max with a bridging finance. So we need to make sure that when they're selling a property, they've got the right agent, they've got the right, the strategy going into the market. We've all seen clients pick an agent based on price or a friend or a family matter, and then it's just sat on the market for 6 months, which tells the market it's not desirable. Then they go to another agent and then they have an issue because it's already been on sale for 6 months. So, choosing the right strategy and the right agent and having realistic expectations about the outcome of the value of that property, the costs involved in it, so important. So for me, it's a no-brainer encouraging people to use a vendor's advocate because one of the biggest headaches we have in the industry is real estate agents. Like, we work really well with some, but at the end of the day, it's not a regulated field. We do have those situations where they're like, yes, I'm the best in this area, I'm going to sell it, and then it will sit on the market for six months. So for me, I want my clients to feel supported and have someone advocating for them and basically being the buffer between that agent and the sales process and actually getting realistic, real information and support. So for me, that's why vendor advocacy is so important when you're selling, because we want the right agent with the right strategy, with the right expectations, with the right price, not overcharging, and we want the actual client to have someone to support them, answer their questions. Yes, good agents will answer questions, but it's about someone that's there just for them, to advocate for them and make sure that that process is smooth, that all their questions are answered correctly, that it's not, just sales strategy. Bridging is a big part of finance and it's great. It's a great tool for people to move from one house to another, especially when you've got kids and you don't want to move to an interim house while you're waiting on the other one to settle. Sometimes you have to, but nobody wants to move twice. So bridging is great for that. But if they're selling, most of the time I will encourage them to at least hear a vendor's agent out and understand what they do, because I feel like that adds a level of certainty to the sale process that you're not getting by picking a sales agent, if that makes sense.
So do you ever have clients that come around that want to sell and buy? I know that legally we can balance it, so hopefully the one settles for the other one to
simultaneous settlements.
Simultaneous settlement.
Well, at the end of the day, we can't get a formal approval. If we're relying on the funds from one settlement for the second settlement for the new purchase, we have to have an unconditional contract on the sale, because the bank wants to know that those funds are absolutely coming their way as part of the settlement proceeds. So they want to know you're using $100,000 from this sale, that contract for that sale is unconditional and it's got a clear settlement date, and that settlement date is going to align with the new settlement date. So you don't have to have it sold when you're in bridging. You can have it on the market because there's enough equity to use both securities to support the new loan in those circumstances. But when you're selling and buying, you definitely have to have that contract unconditional to prove to the bank those funds are going to be available in time for the new settlement. Otherwise, the bank for the purchase finance will not formally approve it. So that's part of their formal approval process. It would be a condition that they set, that they want to see that contract unconditional.
Is it common to have simultaneous?
Yeah. Yeah, it is very common.
I would be quite
It's probably more common than bridging, to be honest,
Okay.
Purely because bridging can be a bit restrictive. People, and again, this comes down to broker-banker support, don't really understand bridging either. So a lot of the times you'll hear brokers say, and I'm in a lot of PD days where I roll my eyes because they'll say, bridging is so expensive. Well, it's not expensive if it genuinely is on the market. It's got a decent real estate agent and you're bridging for 1 month. It's 1 month of interest, right? There's a little bit of extra cost. Yes, the interest rate's not as good as a standard loan, but it's only on that bridged amount for 1 month or 2 months or 3 months. If they're going to sit on it for 12 months, then yeah, bridging can be really expensive. But that's when you've got to support your client towards the right decision, because if they're really going to just sit on that property, then it's probably not appropriate to bridge it. Can they afford to just keep both properties until they're ready to settle?
Yeah.
That would be the better option than bridging. And if they can't, then the only other option is sell and buy. So that's why we see that combination. We see both quite a lot. Some clients put their house on the market and before they know it, they've sold it and they're like, oh no, I've sold it too quickly. I've got to find a new one. So as long as that's unconditional, we can get that formally approved, and we just need to make sure the new purchase is settling afterwards, which is make sure you use the same conveyancer for both transactions, because that's my worst nightmare, when they use one for the sale and one for the purchase, and then we're trying to get everybody to work towards the same goal. Same conveyancer. Please, please, people.
Yes,
don't give
correct.
me headaches.
But I think that if you are trusting somebody in all these aspects, so whether it's somebody helping you buy, somebody to help you with your finance, or a legal representative, if you're already trusting them with the one side, then you should leave them for the whole process, because they know
You would think that would
your
be logical.
story and what you're doing. Yeah, obviously. It's not
And once
logical.
again,
Yes.
we see that every now and then where we're only on one transaction, not the other one. And often I've said to our clients, why did you do that? And they went, oh, the real estate agent told me to use this person.
It's very common. I see that a lot. And, oh, yeah, we used the real estate agent. The real estate agent told us to use this one for the purchase. And I'm like, oh, no. Like, for lots of reasons. It's just, you know, that's another red flag for me, because for me, I want my clients to have people working for them, supporting them, and not being conflicted. And if a real estate agent's giving a conveyancer lots of work, that's okay. That's fine. And they've got a professional requirement to do the right thing. But I do think that it does take away the client's right to make a decision that works for them. For me, I want you to talk to the person that you're going to be dealing with. And I say this about buyers advocates and vendor advocates as well, and conveyancers. Talk to them, make sure that they're the person for you, because you need to be able to communicate with them, connect with them, and they need to understand you as much as you understand them. So talk to them first. And so that loose referral relationships where it's like, oh, no, use my guy, he'll get it done, which is often the conversation. It just takes away their right to have a good experience in some circumstances. Like, clients don't get the opportunity to go, you know what, I probably would have had a better experience if I had a more communicative conveyancer. They didn't tell me anything. Like, I hear this all the time, my conveyancer told me nothing, and then the week before I got all these documents. Now, I know Lynda doesn't do that, but that happens quite a bit. So it just takes away from their right to have a good experience, and they're buying such a big...
It's a huge commitment. And the other thing clients need to understand as well is it's not all based on price. Don't go for the cheapest one, because so many conveyancers in particular will have a really cheap price, but then there's add-ons. Everything they do is an add-on, and they end up being more expensive than if they had just gone for a fixed fee person from the beginning. So I see that a lot, where I've had clients say to me, oh, yeah, my last conveyancer charged me $2,000, and I went, for what? And it was literally all the things we do as a part of our fixed fee, they added on, $200 here, $100 here. And before you know it, you're up to $2,000 and you haven't even settled yet.
Yeah. I also see that a lot with conveyancing or property lawyers. People say, oh, you need to go and use the family lawyer or whatever. The parents want them to use the family lawyer that drew up their estate documents and whatever, and then all of a sudden you get a $4,000 conveyancing fee, and I'm like,
because they're charging by the hour.
They haven't even sent one email yet. So it's, you need to get someone that conveyancing and property law is their bread and butter. Fixed fee, they know what they're doing, lots of reviews, come highly recommended, know what they're doing, because a bad conveyancer can be a bad result for a settlement.
Oh,
I always say to clients,
100%.
if you're going to budget.com conveyancing, please don't. Please reach out to a conveyancer that is giving you quality advice.
But it's not also that. I know that there's a difference. This is just my 22 years of experience, that there's a difference between a conveyancer and a property lawyer. And I've seen that in the Section 32s of give the facts. So real estate agents are my friends. I need them from a matter of building relationships to a sell, and order from the other side as for them to be the listing agent, knowing that everything's going to be done right. but they don't always ask to know info. So it's the same as from a finance point of view. Don't tell me that you're pregnant, because that means that I know that your
circumstances are going to change. Yeah.
So you might have a property and there might be a crack in the foundation, or you'll know which one I'm talking about, or something like that. And it should go into the Section 32. If it's a body corporate issue, or if there's something's been done in the last 6 months, the right thing is for it to be done, not to, I didn't know about it, so I didn't put it in. The aim isn't to get a quick sale, especially working with a vendor or buyer's advocate, because it's about buying the right property, because we all work off referrals and word of mouth, and it shouldn't be it shouldn't be a quick turnaround. So that's the one thing that I've really found on contracts in Section 32 is there's a difference between a property lawyer and a conveyancer. That's just my 2 cents.
Yeah. I also we've had this conversation before. We were talking about red flags earlier. Another red flag is if everybody's on the take, everybody's referring and they're all paying each other money. For me, that's a conflict. I don't want those referral relationships where I'm paying out or receiving, because for me, when I'm recommending somebody like a conveyancer or a buyer's agent, to be honest, now I give them a flyer with the information about everybody and they let them call, right? But for me, it's just about them being able to take control and charge of their own decision-making and their own process and their own outcomes. And I'm happy to make those recommendations of people I've used and I know are good at their job, but it's got to be the right fit for them. So I just think that there's, there is a little bit of a red flag around that. And, everybody needs to get paid and have a charging model that suits their business. And I totally understand why new brokers or new real estate agents or new conveyancers might be putting referral fees in place with each other, but I think we'll see that going out of the industry. It's already gone out of financial planning and there's already a question mark around it in mortgage broking. It's still available in real estate because it's not really regulated and they're commission-based, right? So, but I think we will see it going out of the industry in terms of accountants, financial planners, mortgage brokers, all of those people. I think those referral arrangements will die, and they'll die because of the conflict that it can create. It doesn't mean everyone's conflicted, but it can create conflict.
The other thing is you're supposed to disclose to your clients if you are giving or receiving a referral fee from a lawyer perspective. So if we don't accept fees from commissions from anybody or fees or anything like that, we believe that you do the job that you're paid to do. You choose your own, pay schedule, and I don't want people to refer to me with the whole point of I want you to give me a kickback. And I'm glad to hear that financial planners are finally not doing that as much, because that was a huge thing in their industry.
Yeah, it's been banned. It's conflict of remuneration.
I call that double dipping personally.
Yeah.
The only time as vendor and buyer's advocates, so as buyer's advocates, we never receive anything back except for the fee that the client pays us, because we are working on behalf of the client. When we're selling, it's known that the agent pays us, but when they sign an authority, which means that they're putting the property on the market with that agent, in the authority it states that Metrolinx is commission sharing on and the only time that we would pay a referral fee is if a property manager refers us a property that their landlord happens to be selling, because they're losing out. They're not making anything. So that's the only time that we do. But I think know
it's
that
different,
it's very
though,
common.
when you're like, for us, it's like a real estate agent, for instance, is their commission only. But for me, I've got a best interest duty, right? So my best interest duty says that I have to take your personal circumstances into consideration when I'm making recommendations. So for me, if I'm making these financial recommendations that are in your best interest, yes, we do need to disclose if we're paying any referral fees, but it's going to be a conflict if I was receiving them. So from my end, I don't want to be leaning towards an accountant or leaning towards a financial planner or a real estate agent just because they're paying me a fee. I would rather just take that out of the equation and give everybody the exact same service and support, and they know that I'm there for them, and whoever they choose to deal with, they can deal with their own account, their own financial planner, their own conveyancers, their own buyers advocates. There's really no conflict or push towards one or the other. We're just choosing who's right.
Yeah. And it all depends on the client.
Yeah, absolutely.
And that's why I believe that you should have a pool of your services, because it all depends on the client, and clients come in different shapes and forms. So it's not about the relationships that we have. It's about the client and the client getting the best service.
Yeah, 100%.
So
even if they choose budget conveyancing.
Well, that's their choice, right?
Yes, it does make me lose sleep at night, though.
Yeah. Okay, so we've got one more quick question. What is involved, Lynda, in creating or putting together contract of sale in a Section 32? Is it a complicated thing? Do people need to shake in their shoes, or...?
No, it's not complicated at all. So we have what we call a vendor's instruction sheet, which we send out to the clients, where they give us details and information about the property. So the things we're asking for in particular are, is this property got a tenant? So we need a copy of the lease for that property. And that could be either, I'm talking about commercial or residential, could be either or. We do both. Have there been any works done at the property in the last 7 years? Were permits required? Is it a new build? So we want to know about, have you got all your building permits, your planning permits, if there's planning permits involved? Is everything being registered with the council? Like I talked before about a pool. Is there a pool? Have you registered with the council? Do you have your pool compliance certificates? So it's really important. You can't sell a property without those certificates in place. So the other thing we would look at is when we get the title, do we do a title search? Are there any agreements that are lodged on the title, such as a Section 173 agreement, which is an agreement usually between the council and the developer for the whole subdivision process? And there are certain restrictions and there's covenants sometimes in there that we need to make sure we make full disclosures. So we will apply for all of these certificates or ask further questions based on the information the client gives us, and we'll investigate that further. I've recently had a client who was selling her property. She built a deck out the back and didn't get a permit. So we had to get what's called a 137B, which is a owner builder's report, just to make sure to show that it's compliant and that there are no defect issues or anything like that, or there are defect issues, whatever the circumstances are. So, because not every little reno in your house needs a permit. So if you're doing your kitchen, but you've got someone coming in to do that, so you've got all the certificates in terms of plumbing and electrical, we need those certificates to show that you're compliant, but that doesn't necessarily need a building permit, because you may not have knocked out a wall, you've just put up some new cabinets. Yep. So or you got some new appliances. So depending on the situation will depend on what kind of further information we need.
So how long in advance would you say somebody should really start the process to get their contract drawn up? I
usually think a month is at the start of the process to the discussions anyway, because for us we can prepare contracts very quickly. But it might be the certificates that take a little while, or we need further information from the clients, like, oh, you need to get a copy of that lease. Oh, you need to find your occupancy permits, do all those kind of things.
Sometimes the owner's corporation is just absolutely useless to deal with and you can't get a report out of them, or they're purposely not issuing the report. So there's a problem.
The owner's corporations, if there is one involved, have 10 business days to respond to our request for a certificate after payment is made. So if there's an owner's corporation, we definitely want to know sooner rather than later, so we can apply straight away, and then that way we can chase them if they're taking a little bit longer.
Yeah, and then the reverse of that is on the purchase side. When we're checking contracts or getting those contracts checked, we want to make sure that owner's corporation's up to date, because if they're not using Lynda, they may have an old owner's corporation report in there, and sometimes that's on purpose, I think, because there's definitely been some cladding issues and some water damage and all sorts of
water ingress
issues
and building notices
that have been trying to be resolved by the owner's corporation and may affect the amount that the client needs to put into the property post settlement that they're now liable for. So it's important that someone like Lynda checks the contract to make sure that everything that's in there is up to date and up to scratch, because we've definitely seen situations where the contracts are not, that Section 32 does not have everything in there, and it doesn't have up-to-date information, and that's turned out to be a red flag. So definitely get them checked by someone that's qualified and experienced.
So to wrap it up, thanking you very much, two knowledgeable ladies. At the beginning I said property moves faster, and we help you move faster doing our vendor and buyers advocacy, offering our clients that personal touch, it's all about them. We only work for them, and bring in professions that we have used and trust to help them with the whole process. Thank you, everybody, for listening. If you'd like to connect with us, you can find our details at the bottom of this podcast. If you found this information helpful, you can subscribe to VSBN. We'll be diving deeper into these topics in further episodes.